Good morning. Hi, everybody. It's your buddy Uncle Bruce here wearing his green T-shirt today because we got to pull out all the stops. What is going on? Welcome one, welcome all. It's Friday. This is August the 13th, 2021, Friday the 13th, and we are
What is going on?
trying to figure out
Welcome
in
all.
plain English what has been going on in the last few hours, particularly since the close of business Thursday night, yesterday, when we were watching our one of our favorite stocks, Sofi, close at 1746 after reaching a high of 1752 or so. The shares looked to be on a tear. Earnings were about to come out, and the stock had been going up and up and up all day long. It ended up with like I said, a gain of 56 cents. Looked fantastic. Volume was 36 million shares on the day yesterday. And we began to watch the aftermarket trading. And within a few minutes of the close, the shares were even higher. They were as high as 15.75 even. Looked to me like we were going to reach $16 a share. If not, I don't even know if we printed 16 on the aftermarket last night. I don't remember. It's such a blur now. So much activity. And then within probably 30 seconds, we saw the stock go from about the high 15s or the high 17s to the 16 range, and then into the 15 range. And we are now this morning at 15.50 a share on the pre-market, with a volume of 1.4 million changing hands. We're down $1.97 from the actual close of business last night on the New York Stock Exchange. Make that NASDAQ. Sorry, this used to be a New York stock, now a NASDAQ stock. And we're at 1549, 1550 on 1.4 million shares. The company came up with their earnings and delivered on all kinds of measures. Very strong numbers, very good engagement, very good customer numbers. Everything growing. They made one report. They had to disclose everything, as public companies do. This is the first time they've ever been a public company to disclose all their figures. And they did disclose the cost of going public. And this is a number that is a one-off thing. You go public one time, like you get married, theoretically once. You go public one time, and you have to pay expenses that you would not normally pay to become a publicly traded company. And that includes a lot of legals, a lot of filing fees, listing fees, auditing fees, on and on it goes. It is a nightmare of paperwork that must be handled. You are also tangoing with a group you have never tangled with before, the folks at the SEC. You're now trying to become a reporting issuer, a publicly traded company, and you're trying to become part of the public world. You have to go through all the SEC rules and regs. And in the case of Sofi and 500 other companies, I should say, in the case of Sofi and probably up to 1,000 other companies, 500 of which are Sofi, private companies trying to go public, and 500 of which are SPACs that are trying to vend in their private masters. You have 500 on one side who are already public, 500 on the other side who are trying to go public. All 1,000 have to talk to the SEC at the top of the pyramid, and the SEC changed the rules back in the spring of this year on going public and disclosure rules, the warrant reassessment rules, write-down rules, just all kinds of BS that came out of left field that were instantly instituted, passed without discussion, and all of a sudden 1,000 corporations had to restate all of their financials instantly. You can't do that by taking an eraser and going, okay, well, I'll just change last quarter's number from this to this. Oh, no, you can't do that. No, you have to bring in the auditors to re-audit the entire deal all over again. You have to bring in the lawyers, securities lawyers, very expensive people, highly specialized, to refile all of these documentations. And so what ended up happening in the case of Sofi and everybody else is there was at least a 100-day delay in going public for almost every company out there that was in the middle of a deal to go public through the SPAC system. Sofi yesterday revealed to its shareholders the public just how expensive that was to them. When it's all said and done, whatever expenses the public company incurred, the SPAC, and all the expenses that SoFi incurred, the private company, merging together, putting the books together of the two companies and coming out to the public with the first quarterly release, they had to disclose, hey, here's how much this cost us. It didn't just cost SoFi money, it cost the SPAC a bunch of money. And both had to merge their numbers together to come up with a cohesive number. And if you take out all the BS from the SEC, all of that crap, and the reinstatement of values of these warrants that are so-called a liability now, like all of a sudden trying to raise more money on an option is a liability. Where they come from with that one, I don't know. I don't want to know because it is unexplainable. It is uninterpretable to the average human being. The bottom line is hundreds of millions or whatever it is, millions of dollars had to be taken off the top from SoFi's numbers to make them declare that they lost money in this latest quarter. They had to declare a loss. They quickly said, we didn't lose money, we lost paper value. We didn't have to pay money out in the last 3 months for these losses. These are write-downs, and we had to write them down. We paid our legals months ago. 6 months ago, we started paying legals. We were doing this deal back in February, March, way back when. The latest quarter is when we had to reinstate the financials to adjust for it. So if you take the so-called earnings before income taxes, depreciation, and other nonsense, and you come out with a real flow number, like how much did you bring in and how much did you spend to be in business? Let's just talk about the business. You go to that level and you come up with this company going, holy crap, they're making all kinds of money. These guys are doing great. They're doing very well. Why do you say odd prices? Because if you try to buy it at $15, there might be 50 buyers with you. If at $15.01, there might only be 3 other buyers with you because people think in round numbers. So when you buy 1 penny ahead of a round number. When you sell 1 penny below a round number. So if the stock runs up and let's say it goes to 16 and you want out, sell at $15.99. Don't sell at 16. You'll be with 50 other sellers. You might not get out. That's why you avoid round numbers. What should I do? Should I buy 10 contracts of SoFi, $15 calls, January 2022, or should I buy 200 shares at $15 a share? How do I play it? Now, if you buy 10 contracts, you're leveraging 1,000 shares. If you buy 200 shares, you're leveraging 200 shares. So there's that. So if you buy the 10 contracts, you're leveraging 1,000 shares. If they go to $20 a pop, they're $5 in the money. They're worth $5,000. If the stock goes to $20 a share, your 200 are higher by $1,000. So you're either $5,000 richer or $1,000 richer for the same move. If the shares go to $25 a share, they reach $25 a share, you're going to have $10 contracts, book value plus premium, of course. That's a lot of money. That's $10,000 gain. Whereas if the shares go to 25, the 200 will be worth 2,000 more. So what leverage do you like? I like the January timing. I'm not afraid of the price, $15. So maybe the options might be the way to go. Might be the way to go. Can you remind me when NSH and VACQ will change their ticker symbols? I think NSH becomes Spire today. Today's the 13th. Yeah, today's the day that the shareholder vote's held. So probably Monday or Tuesday, NSH will become Spire. SPIR, I think, is going to be the new symbol. And then VACQ gets shifted over on the 20th of August. Next week, Friday, is the vote. So probably the next Monday, it'll become Rocket Lab, RKLB. There you go. It's coming. A story came out that Richard Branson took out $300 million out of SPCE. Might he start focusing on ME, his other investments? One can hope anyway. Understand that Mr. Branson is involved in dozens and dozens and dozens of ventures simultaneously, and that the time will come for 23andMe. The time will come and it will not wait for you. If you try to time this 23andMe, you could be sorely mistaken. Selling now would be a huge mistake because you could be selling it at the all-time low. I would not be tinkering with this at all. You haven't covered GameStop at length for a while. Can you cover your thoughts on what's going on right now on GameStop? There's an article you should read that came out today in the Wall Street Journal, all about Ryan Cohen. Very interesting article talking about the history of Ryan Cohen and GameStop from day one, when he was listening to what was happening with the stock and started buying it up. I love the story of how he became a director, how he took over the company, how he staffed it with his people, how this company is transforming itself. I like the whole thing. I like how the company has gone from a debt position of over $200 million and very little cash to no debt and $1.9 billion in cash. I really like this story. I like how the company is building distribution centers, and I like how this company is going to become a very e-commerce centric kind of company. I like it all. $159.94 on the stock. I don't like how cheap it is, but I can't move the market by just looking at it. A very interesting story in the Wall Street Journal on Ryan Cohen. I suggest you get your hands on it. Read it up. It looks pretty cool. Get ready, kids. This weekend, oh my God, it's happening. Noon Eastern time for each class, Saturday and Sunday, live right here. And Bruce will be on the whiteboard just going. This can be great.